Yo, what's up, family? Uh, Welcome back to another talk. On my way home again, and I'm wondering if everyone else is noticing the same trend that I'm noticing, which real estate. There was this huge boom about investors and everybody interested in buying and investing in real estate. Obviously, interest rates were really low, and people were seeing opportunities all the time, and everyone there's just this huge boom, and obviously, real estate prices kept booming. I don't know if you guys are noticing, but now starting to see crickets, right? Things have slowed down dramatically. Everyone who was just excited about doing real estate seems to have really just, started doing other stuff, right? Realtors are starting to quit and do other jobs, but then NAR settlement and all this other stuff going on. So I'm wondering if other people have noticed this because I think what we're seeing is that if you were one of those people who were waiting, for the right time or waiting for prices to dip, you missed the boat. I think it's just it's too late. That's just my personal opinion. I don't think you're going to have the opportunities that you did. Remember to like and subscribe on this video, and I'll tell you at the end of the video what I see is the way to now buy real estate, because I don't think the traditional ways are going to work anymore. I got a great example. So I have a client of mine, as most of you guys know, I'm an insurance agent as well. I own my insurance agency. I have a client of mine who in April of 2020 called me and said, hey, I need to cancel my home insurance because I'm selling my house. And I asked him, yeah, so perfect. What are you going to do? What are the details? And he said, I'm selling the house and I'm going to go rent. He goes, my house value has gone up so much and I think prices are going to tank. Remember, this is right around COVID time. I think we had just had our lockdowns here. Everyone was a little bit uneasy. Nobody knew what was going to happen. And so we didn't know if the market was going to go up or go down. And so in his mind, he thought market prices have to crash. That was his thought process. So he sold his house. He pocketed $100,000 and then he became a renter. Really excited, thought he made a great deal. Well, fast forward to now, it is August of 2024, so it's 4 years later, and he still rents. And his rent's gone up dramatically. And I'm assuming he still has that 100,000, but truthfully, I think he's probably spending it piece by piece on renting now. He obviously lost out on a ton of appreciation on the house that he did own. I looked up his house, and his house has gone up 200 grand since that time period. So obviously not the best move, but I think there's a lot of people like that. A lot of people are sitting on the sidelines, and they are waiting for prices to crash. Well, unfortunately, prices aren't going to crash. It's just not going to happen. People have this memory of 2008, 2009, 2011, all that time period where prices dramatically dropped. That is not a normal thing. That might have been a once in a generation situation. That kind of crash isn't going to happen. And truthfully, if it did happen, not a lot of people are, 100,000 that this guy had, that's not enough to buy a house in cash. So I think a lot of people are waiting on the sidelines for that to happen, and I just don't see that happen. The other question that I'm starting to see come up a lot on the investor side is people are starting to send deals and go, hey, is this a good deal? It's negative cash flow, meaning the mortgage is more than the income I would receive off of rents. Is this a good deal because it's a good area or whatever other excuse you can come up with, which the answer is always no. That is a terrible deal. There's just no reason to buy negative cash flowing properties. The problem that people are having right now is that there are no positive cash flow opportunities, at least if you're buying the way most people buy properties. And what do? They usually get a realtor, they usually look online and they run some numbers, they figure out what their mortgage is going to be, and they're seeing that because of interest rates, mortgage payments are really high, and rents aren't. Geez, almost got in a car accident. I see that guy. And rents aren't high enough to cover those mortgages. So they're thinking, well, at least if I buy the house, I own the house, and my mortgage gets paid down. But if you're already negative cash flow, you're setting yourself up for some real hard times. And this year, for my portfolio, is a great example. Just in the last 2 months, this is the last 2 months, we have had to replace a water heater. It's about $1,200. I today am fixing a roof that ended up having more damage than we thought and needs to have bigger repairs. It's probably going to end up being about $3,000 to fix this roof. I've replaced some plumbing in another house where there was a shower knobs that needed to be replaced. We had to replace the things that were there. That was $1,200. I had a TV in my room rental go out, so we bought a new TV for like $300 or $400. Um, there's a few other things. I mean, this is all in the last like 2 months. So imagine if you have properties where you've got all these thousands of dollars of fixes that need to happen and you're already losing money every month just trying to keep up with the mortgage. If you don't have a lot of income coming from somewhere else to replace that, or a lot of savings that you're going to start to burn through, you're going to be in a lot of trouble. Or you're going to end up skipping out on those repairs and you're going to let your property fall into disrepair. So really bad decision if you're trying to buy negative cash flow properties. But I think that's all people are seeing, so that's what they're deciding to do. So let's talk about what will work now. The last property we bought a condo, had some equity in it, but again, most people who bought it wanted to buy it the traditional way. It just wouldn't have made sense. The numbers wouldn't work. We were able to purchase the property, but we can get higher rents because we put a tenant buyer in the property. That is someone who is set up on a rent to own contract. So because of that, because they are going to eventually buy the property and we give them a set property price, they're going to purchase it for maybe 2 years out. But because of that, they pay higher monthly costs. And on top of that, we fix our profit into the deal. So the actual numbers for this one were a property we bought for $135,000 after all the fees and everything. $135,000. We had mortgage payments of $700 a month. And then this one was different. We took over the mortgage for a lady who was in pre-foreclosure. So she left and we just basically started making payments on her mortgage for her. But we found someone who was interested in buying the house. So we didn't even do any renovations on the property. We let her renovate. I didn't have to paint. I didn't have to do carpet. I didn't have to replace, vanities, popcorn ceiling. We didn't have to do any of that stuff. I did actually replace carpet in one area for about $500. But outside of that, we did nothing. And that is, honestly, I love that. Usually it takes us a couple of months to renovate a house completely and then put it on the market and then get lower rent from it. But in this case, we've got a mortgage payment of $700. That's it. And that includes an HOA that we have to pay every month because it is like a condo townhome type of deal. But the tenant who's in there now pays $1,350 a month. So we profit about $500 a month. I think a little over $500 a month, and we don't have to do any renovation. We don't have to do any maintenance. She's responsible for all of that. And we bought the property, like I mentioned, for $135,000. She is set to buy the property from us in 2 years for $165,000, giving us a $30,000 profit. But on top of that, we're also going to continue to make $500 a month off of her rents. And so for her, it's a great deal because out of what she's paying, $250 a month out of that $1,350 is going to be saved up and used as her down payment for when she purchases the property from us. So if you do the math, 24 months, $250, she will have $6,000 that we can use towards her down payment. That is a huge win for her because she didn't have great credit. She was actually a person who was in the Maui fires where she lost her home. She was living in credit cards. She was really struggling. So she moved out here to Las Vegas and just so appreciative. She owned a cleaning company. She's been phenomenal, honestly. But she is totally comfortable with the property and where it is. And and she was just really grateful to have a situation where she could find a house and, call it her own right away. And in that time period, she doesn't have to worry about rents getting raised. She can do what she wants to the property because I let her renovate it. She's already painted. She's already done some other stuff. So I think it's a great deal for them. And obviously they have to make sure that they can qualify for financing at the end of the term. But there's a lot of ways to help them with that too. I work with a lot of different loan officers that I recommend to them if they need it. We try to check in with them and make sure that they're staying on track. Obviously, they do need to continue to make their payments because if they don't, they can lose all the deposit they've already put down along with the monthly rent that they've been paying. So they do need to make sure that they do that. But my goal is to make sure that they do get qualified and then purchase the house. You could really make a nice income just by buying 2 of those properties a year. If I do 2 of the same type of deal, that is, $500 a month for those each. So that is $1,000 a month, and just in terms of cash flow. But then on top of it, every $30,000 or $40,000 profit times 2, we'll make another $60,000 to $80,000 a year that we'll be able to turn over and reinvest into more properties, or take as income, whatever we decide to do at that time. This is what I'm going to be talking about in future videos a lot, is really the details about the rent to own, especially here in Las Vegas, because I think this is a great way to help people get into houses that they might not have been able to get into. And if you think about the other opportunity for people right now, the house market is really hit it's really stagnated a lot because of interest rates. And we are pretty confident now that we're looking at all the numbers that the Fed is going to start lowering interest rates. At least they're going to head down that trajectory. Now, it doesn't mean that they're going to do it a lot, but imagine if you are looking at what your payment will be on a house right now versus 2 years from now, you could be seeing a lot lower interest rates. And if that happens, the property value could also go up. Well, for her, she could end up in a really great situation where she's getting a property for 165 that might be worth 200 grand. Anyway, so I think that could be a really good thing. She could be seeing much lower interest rates at the time when she's ready to buy. So hopefully people realize that there's still opportunity out there, but it is not the traditional method. Hopefully this helps. Please remember to like and subscribe as we talk about more opportunities in Vegas specifically. I'm going to look to build up a buyer's list for people who are interested in this rent-to-own opportunity and get them on an email list. So that way, when I come across properties, I'm just going to send it to them and say, hey, is this one you'd be interested in? I've already pre-qualified people, so I can tell if they are ready to move forward, and then we'll just find good quality housing for people, man. I think that's what's needed today. So hopefully you enjoyed this video. Thanks for listening. Bye.